Hello and welcome. You're watching Your Trades. This is Mansi Dave, and this segment, this session is one such where we help you analyze what should be your strategy for the next upcoming session of the market. Now, taking a look at the market scenario during the session as well as the market during the entire week. Let us now first start how the week for the market, entire week for the market went by. It was a lackluster week for Nifty. We did manage to close below 24,400. Quite a sentiment where the markets were literally facing a lot of challenges coming in from the global front, as well as if we talk about the sector specific as well as stock specific approaches of the market for the entire week. Nifty 50 did decline for the sixth consecutive week, mainly dragged by stocks like Adani Enterprises, Apollo Hospitals. The defensives, the pharma, healthcare, diagnostic were also not being able to hold the market the way they should. At the same time, Nifty did register the longest weekly losing streak in over 5 years. Yes, in over 5 years since April 2020. So that itself explains how fragile the market, how weak the market during the entire week went by where. Nifty did hit 3-month low this week, and the mid cap and small cap did decline for the third consecutive week in a row, where PSU Bank were the top sectoral gainer this week. And it did snap 2 weeks losing streak, mainly led by stocks like Indian Bank, Bank of Maharashtra. This was the only pocket which was doing positive rounds during the entire week. We can say throughout the week, and also while we were closing, all of these stocks were showing signs of positivity. On the flip side, Nifty Pharma was the top sectoral loser, which declined for the second consecutive week. Dragged by Biocon, Divi's Laboratories, and all the pharma, healthcare, diagnostic pockets, the segments of the pharmaceutical space in particular. Nifty FMCG was also down by 2% this week, mainly dragged by stocks like Britannia Industries, Emami. Yes, the festival season has started, and we need to have a look at the consumption space altogether. And when I say consumption, it means FMCG along with the automobile space, as well as space like hotel, travel, tourism, all of it. But yes, if we just talk about the FMCG, it's a mixed bag at present. When you see numbers, the quarterly numbers for the FMCG players and the scripts of FMCG have started coming in. Almost all of them have come, and it literally is a mixed bag where Britannia Industries and stocks like Emami are facing the heat. Last but not the least, real estate did decline for the third consecutive week. The energy index also did decline for the third consecutive week. So clearly it was a lackluster week for Nifty, and while we did close during the last session, 24,400 was the level. Now, while we are talking about all of this, there were a lot of news that were doing rounds on the markets, both from the global front as well as domestic front. We have the earnings season ongoing, and in the global front, we have the tariff jitters and tariff scenarios where Donald Trump is constantly adding to it, and the Indian government is also facing and giving the right replies to the Trump administration. But moving ahead, what should be your strategy for the session next? To help us with the same, we have two experts joining today. Mayuresh Joshi, Head Equity with us, is joining, and we also have women from Motilal Oswal, Shivangi Shada joining in. Mayuresh, Shivangi, thank you so much for giving your time. It's a pleasure talking to you this afternoon. I'll start with you, Mayuresh. How did you sense the entire week? Yes, we had a lot of challenges. It was a tricky week because there were so many news flows coming in from the global markets, and it was difficult to digest. But one thing I would say, and one observation, Indian markets now behave quite maturely, and rational approach is what we do see.
Afternoon, Mansi. Good to see you and pleasure to be on your show. Oh, yes, I think it was a roller coaster week. I think this was one of the most wildest ride that you might have in a water park, wherever you've gone at one. And therefore, I think all these events which transpired in the coming week and primarily related to Trump tariffs have probably taken the markets in terms of the correction that you are probably witnessing. However, I think in terms of the reaction itself, I think the reactions have been absolutely mature. You're right. I think there is no shakeout in the market. There is no abrupt sell-off in the market. Obviously, to a large extent, this has been supported by domestic flows, which still remain strong. And therefore, I think the Indian retail investor probably knows the secret sauce. I think if you stay invested into a market for a longer periodicity of time, and in periods like these, instead of getting shaken out, if you continue your systematic investments over a longer period, they will yield results. So yes, I think Trump tariffs were something which were the center stage as we speak, but the markets have taken it very, very maturely.
Absolutely. Shivangi, hi, pleasure talking to you as well. From the fundamental lens, we see the markets behaving quite maturely and the undertone is bullish. But what does the technical lens say? We did close below 24,400, and this was the week where we did cross all of the important levels towards the downside. How do you see the indexes performing in the sessions next?
Very good afternoon, Mansi. Thank you for having me. So, of course, very rightly mentioned that there has been a roller coaster week, but of course, the markets have matured and they've been reacting quite well. Overall, we've seen that the indices have been facing somewhat stickiness at the lower levels, so far as that there was somewhat buying interest which was emerging at the support levels earlier this week. But of course, towards the end, we've breached those important support levels as well. But then again, the kind of global market headwinds that we were facing, I think the fall has been much less because there was a cushion on the downside, which was emerging for the Nifty indices. But of course, this has been the fifth consecutive week of continuous lower lows formation, and there is weakness that is still pertaining. We've lost nearly all the gains that we had done from May. So we're back to those levels now. So overall, the market texture looks kind of a profit booking sort of going forward for the next few sessions. But 24,000 will be an important support, which does not look like breaking. So 24,000 is what we're looking at next, with a hurdle at immediate 24,500 and then 24,700 marks on the upside. Of course, call writers have also shifted their base lower, but overall, we are seeing that some sort of buying could emerge at the lower levels.
So these are the levels on the indices which one should focus on. Shivangi, I'll come to you for your stock-specific recommendations as well. But Mayuresh, there is so much happening in the global market and the domestic market as well. I mean, the tariff jitters are continuing and we see uncertain contingencies coming from there. We have our quarterly earnings, the first half of which was not that great, but the second half is showing signs of hopes. And at the same time, FIs are not making a comeback. The triggers, actually, a direction for the market, at least domestic market, was missing. But do you see the festival season as another ray of hope and the consumption also entering in from your end? Because right from Raksha Bandhan, then we'll see all the festivals coming in, and consumption, automobile, hotel, tourism will all be the places which we can talk about then.
Oh, yes, I think that's the hope, Mansi. And again, I think both urban and rural consumption are expected to make a very strong comeback in the second half, primarily because of the tax cuts as far as urban India is concerned. Better monsoons, better farm gate prices for cash crops will mean better realizations, and therefore rural incomes expected to go higher. And therefore, I think consumption as a theme is expected to pick up. I think that's the hope. And therefore, I think the three legs that pushes the GDP higher. One is obviously consumption, which is expected to go significantly higher every passing quarter. Second is the investments. Government capex continues at a fast pace. Private capex also showing signs of green shoots and revival as well, aiding impetus to the government capex as well. And third, I think both investments expected to come through. Investments is where I think the lag factor is at this moment. You're absolutely right, both from an FDI and FPI perspective. And it's primarily based in terms of Trump tariffs to begin with, but also I think the lack of earnings that are coming through as we speak. And therefore, I think the readjustment that is probably happening from an FDI stroke FPI perspective, as far as their allocations are concerned, might quickly turn around if we see some revival in earnings expected to take place. If that probably happens, and with Trump tariffs behind us as we speak over the next 3 to 6 months, I think there is no reason why I should suspect why FDI, FPI flow should not come back. Because if you place India in the global perspective at this juncture, I think it's still largely a domestic driven consumption economy. And therefore, in my opinion, I think FDI, FPI, even if they're probably rebalancing or reallocating their funds as we speak, will make a comeback as we head into the second half, which makes me very, very optimistic that any fall that probably happens, which is not structural in my opinion as we speak, should be taken as buying opportunities in good sectors, good stocks, where leadership position exists and where earnings are expected to make a strong comeback.
Right, and I complete. Welcome back. You're still watching Your Trades. We have Shivangi Shada and Mayuresh Joshi with us to talk both on fundamental as well as technical aspects of the market. Shivangi, coming to you, there were a few stocks which were doing positive rounds on the back of good set of numbers. To name a few, Titan, LIC, Kalpataru projects all did post strong quarterly earnings, and the stocks were doing positive up moves even in the volatile markets. Is there any script which you like from them?
So of course we've seen that this space has picked up momentum, and there has been slight sort of buying that has emerged from the lower levels. But I believe then again there is still steam left in stocks like Titan, which is my preferred pick. Ahead of the festivity as well, we are anticipating good amount of volumes adding up over here. So Titan has been my preferred pick, and in fact, we've discussed it earlier this morning as well with you, Mansi. But overall, we've seen that there has been consistent buying in this one, from the last 4 months, and week-on-week basis as well. We've seen that it has recouped previous week's losses and standing very strong above its 50 daily exponential moving average as well. So this one is looking quite positive for the next immediate target of 3600, and then likewise positionally higher. But 3600 is what we're seeing immediately with the support of 3400 levels.
Counter Titan is one with a target price anticipation of 3600. But Mayuresh, another important event, economic indicative action during the week was the RBI credit policy. Of course, the rates were unchanged, but the governor did continue to do whatever required to support economic growth. Having said so, current inflation forecast, do you think gives RBI a headroom to cut rates later? We have the next policy coming in the month of October. Will there be let's say a festival before Diwali bonus coming in the form of rate cut from RBI?
That seems to be a possibility, Mansi. I think there is still one eventuality of 125 bips cut expected to come through. And that might happen either in the next policy or after that, hopefully in the next policy itself. And again, I think how do the global events play out? Does the Fed move in September? What kind of an impact on inflation does Trump policies have, not just in the US, but across the globe? How does he negotiate with India and China and other BRIC nations? Is something to be watched out for. Yeah, so the hope is that there is a 25 bips which is expected probably in the October policy before the festive season. So let's see how RBI goes about.
We will keep an eye on that, an important one, the interest rate decisions. But at the same time, Shivangi, a few other stocks which were positive during the trading session. One was NTPC. We did see a 1.5% upsurge in the stock price, and at the same time, another stock was Cummins India. It was doing positive during the session, the last trading session. Technically, what does the charts indicate according to you?
So Mansi, NTPC, we've seen a good comeback today. The stock is up, fairly well today. But then we've seen that the stock has been quite a lot of lackluster movement, from the last 3 odd months. And we've seen that any small recovery was again, resulting in profit booking decline. So I'm a little, cautious on this one. This would be a wait and watch for me at these levels. And I would, recommend that we could wait and watch for this one to hold above 340 for another, fresh buying, which will have a good risk reward. So yeah.
All right. And Cummins India?
Talking about Cummins, this one is very positive, and we've seen that this one has actually been very strong from a pretty long time. We've seen on the monthly basis from the last 6 months, it's been making higher top formation, which means that buying has been remarkable. Even today, we've seen a price volume surge, which is looking quite positive. It's come out and it's closed, at the higher levels, which indicates that the momentum is to continue from these levels as well. So we're looking at 3950 immediately, and then 4100 positionally for this one, but support would be placed at 3750.
Before we take the trading ideas for the week next from Shivangi, a fundamental question from one investors' perspective. Because the markets are so tricky, investors do see downtrends in the market, also anticipate entering the market, but the confusion lies as they don't know where the bottom will shift. Now, that's a question in itself, but for the people who want to park their money and invest in the market, it is a right time. what should be the strategy, where to enter, and if I give you a plain canvas, how will you draw it?
So nobody knows where the bottom is, Nancy, to be very honest. And at the same time, I think our erstwhile founder, he has a very famous quote that he's never seen a successful pessimist ever in his life. So I think remain extremely optimistic, as I said, in terms of India as a story over the next 5 to 10 years. Obviously, domestic driven stories with all that is happening around us is still expected to do well. So irrespective of Trump tariffs, I think certain hospital stocks within the healthcare space can continue doing well. Certain pharma stocks can continue doing well because irrespective of what Trump says, it is impossible to have a cost-effective model in producing medicines inside the US. Apparel makers, consumption as a theme, right? The domestic apparel consumers, a few names look very, very interesting because as rural and urban consumption will come back, I think these value apparel makers who are largely domestic driven might continue doing well. FMCG is expected to make a very, very strong comeback as we speak. Certain agrochemical stocks can still continue doing well because volumes, because of better monsoons, better Rabi season expected, input costs staying lower will mean better operating leverage. Financials selectively are expected to give huge support because as private capex starts coming back, the kind of support that the financials will give to the ecosystem as a whole selectively can continue doing well. And therefore, I think domestic driven economies within the consumption pack, within financials, selectively within autos, agrochemicals as a space, have no effect in terms of Trump, probably what Trump is doing or is expected to do. And therefore, focus on these stories because these are stories where earnings will probably still remain very, very intact. And don't feel perturbed. I think if corrections do come through, I think it is a welcome opportunity because it is giving you better entry opportunities on stocks that you probably missed in the past few months.
Needed advice. Thanks for giving that advice. And coming back to you, Shivangi, what will be the trading ideas for the week next?
So for the trading ideas, I've identified, the smaller banking names have been doing quite well. So up from that is Indian Bank for me. This stock has seen resilience despite the weakness in banking index. And we've seen that there has been a consolidative move in the last 3 months, which is now getting prepared for it to come out of those levels. It's past its previous hurdle zones as well. Of course, closed slightly below that, but then again, we've seen that momentum is quite strong here on this one. And despite the market volatility, this one has stood up quite well. So we're looking at Indian Bank for the next target of 675 levels with a support of 638 zone. Along with this, of course, some of the other consumption name stocks are looking quite positive. But on the top is Titan, which looks quite lucrative.
Titan is quite lucrative at this point in time, and a few other trading ideas coming in from Shivangi Chadha. Mayuresh, any particular sector which you are focusing on right now, and any particular sector which you're avoiding right now?
So as I said, I think hospitals as a theme is something within the healthcare basket where numbers have remained relatively stable, expected to remain relatively stable and strong as well, because they've adopted a very unique strategy in terms of expansion, both brownfield and greenfield. And therefore, I think the kind of leverage that happens on the balance sheet is minimal. The average revenue per operating bed expected to go higher. And therefore, I think the component in terms of earnings delivery expected to remain extremely strong. I think sector that I still keep on avoiding at this juncture would largely be IT. I think there is still a lot of headwinds that the entire sector is facing. What you've probably seen as a beacon of hope 3 decades ago, I think that model probably has to change. There are a lot of companies across the globe, including the Chinese one, which are coming out with a lot of products and platforms that are largely AI generated. And AI is going to become the buzzword going forward as we speak. So agile AI, agentic AI, generative AI, a lot more investments need to be done by our guys. The labor cost advantage that was with IT companies a couple of decades or 3 decades ago no longer exists because products and platforms with superior efficiency and delivery models are probably overtaking the labor cost advantage that IT companies earlier had. And therefore, they'll have to remodel themselves, reinvent themselves. And that process might take some time and some hit unless that happens. So I think a little bit circumspect on IT as well.
Mayuresh and Shivangi, thank you so much for giving your time and also sharing your views, both fundamental as well as technical on the market. Thanks a lot. And now moving ahead, Trump now imposing 50% tariff on India. What are the kind of headwinds investors anticipate for the Indian market? We speak market honkos to understand the near-term and long-term key drivers both for equities and economy. Listen in.
Large infra names looks very good from the current level. Hotels and hospital stocks looks extremely good within pharma, diagnostic, or whether it's a domestic formulation, even generic, everything looks extremely good. NBFC has a potential to outperform banks. Insurance has potential to outperform banks. So financial services skewed towards insurance, skewed towards uh, insurance side and the NBFC side. Then if I have to look at, then I look at very stock specific opportunity because power is the thesis, which is a decadal call for us.
Our valuations are not very low, and it's not what you call a place where you can do bargain hunting in a big way. But there are opportunities. We always have been going through opportunities. It will happen in the future also. There are pockets of opportunities.
I'm hoping to see a stronger domestic demand during the festival season, and that might help the market. That's what my hope is. Outside the finance sector, maybe there is domestic healthcare, which looks okay. Some of the other domestic consumption stocks look okay. I think there are a smattering of them from a sector perspective, but I think on a bottom-up basis, you have a lot of opportunities.
Market flows also give you some sense that FIs could have oversold if you look at the F&O positions right now. So perhaps could there be a near-term small bounce? Who knows? But possibly the trend has shown that in the past. But we maintain that next 6 to 9 months, large caps over mid caps and small caps. That's number one. We continue to maintain that it's a stock pickers market, very difficult to find complete sector level trends. And hence, this is how leading institutional investors should navigate the market.
And with that, it's a wrap on this edition of Your Trades. But there's a lot lined up on the other side. You stay tuned with ET Now. Thank you.